Today on The Pulse, do you have the cash you need to grow your business? Are you having a hard time getting your small business loan approved? Or simply put, are you properly managing your finances? Well, we're going to help you with all of that coming up next. Calling all entrepreneurs. It's Economic Development Week in Prince George's County. The only show in town dedicated to helping Prince George's County businesses. Hello, I'm Denise Roberts, and welcome to The Pulse, the show that's all about Prince George's County businesses. Small business loans are available from a large number of traditional and alternative lenders. One of the key steps in getting a business loan is knowing who the right lender is for you. My first guest is Schnearia Ashley, Community Business Development Officer at BB&T Bank. Welcome to the show.
Thank you, Denise. Happy to be here today.
Oh, good. So can you tell me a little bit about what you do at BB&T?
Sure. So I've been with BB&T Bank for 11 years, and today I am the Community Business Development Officer. So in this role, I support the bank's outreach initiatives, and one of them happens to be small business development, being a resource for the community, the business owners, making sure that they have all the solutions to meet their growth goals.
Okay, and does that basically mean small business loan programs?
Absolutely. Access to capital is one of the main things that businesses need to get from here to even there.
Okay, so what types of small business loans does BB&T offer?
Several. So we are a traditional bank, and just to take a step back, BB&T Bank has been around since 1872. We are now at the tip of Pennsylvania, all the way down to the Florida Keys and out into Texas. We're the 5th largest insurance brokerage, so our insurance spreads all across the nation. So I think we're pretty equipped to support most businesses. When it comes to lending, I mean, we have all sorts of options, Denise. I mean, if they're looking for loans to finance different things, we have equipment finance loans. If they're looking for lines of credit, which in this area seems to be a lot popular, working capital lines of credit, we have those secured and unsecured options. It really depends on the conversation with the business owner. Okay,
and as you mentioned, one of the biggest issues for a lot of small businesses today is getting access to capital and either getting loans from traditional banking industry. BB&T Bank is considered a traditional bank, right? But what separates BB&T Bank from all the rest of them?
Me, say. I think BB&T is a relationship-based bank. I mean, we do a lot to make sure that we have the conversation way before the need is addressed. So for our clients, we know when it's time to apply for a line of credit, and maybe 3 to 6 months before that, we already looked at financials. We already had the conversation on how are you going to use this line of credit so that we can prepare the business owner. You know, to your point, when I hear that businesses say, okay, it's so hard to get access to capital, banks aren't lending, it's really shame on that bank, because if you have the right relationship with your banker, anything is possible to meet that goal.
Okay, that's not something that you're going to hear commonly from most people from banks, and you sound like you're quite the cheerleader for BB&T.
Okay.
But how difficult is it for a small business to get a loan from you?
So I'm a cheerleader for small businesses.
Okay.
And what I see often is that they're not prepared because they're skilled in their trade. So an electrician can tell you everything about wiring. A government contractor is going to tell you about the different bids and things they have to work on. But when it comes to your profit and loss statement, or it comes to your cash flow analysis, those are things that business owners, in my opinion, they don't get that at first glance. Okay, so it's difficult, I think, because there's a literacy gap. And if you are going to a bank for a transaction, then it's just a transaction. But if you have a relationship with your banker, they're the advocates that talk to the underwriter and kind of get those things moving along and approved. I've heard that too, Denise. You know, I go to different networking events and they're like, oh, you're a banker. But at the end of the day, if you have a relationship with your bank, you're going to understand why you can't get the loan, whether it be credit or cash flow or maybe need a down payment. That conversation needs to be had before you say, I need $100 million.
So you're going to be realistic with them.
Yes.
And not make false promises, obviously, or get their hopes up high.
Yeah.
But so what kinds of issues are you seeing, or is BB&T seeing when small businesses come to them for loans?
Credit.
Okay.
Personal credit. I'm going to tell you that if you have a business and you're making I mean, less than $5 million in revenues or so, you're going to be a personal guarantor. So to be the personal guarantor, you have to show that you have a strong character. There's like 5 C's when we look at any type of credit request. It's a character, capacity, collateral, condition, and capital. I know I said that really fast.
Yeah, well, but go through some of them.
Sure. So character is all about the personal guarantor. You know, for any loan, we want to know what skin do you have in the game and how have you handled your personal finances, and that's going to tell us how you're going to handle this business request. Condition is something that I think we should bring up also, because we did have a time period where there was a bubble that popped. Individuals lost a lot. And those are things that just have to do with condition. So with any request, if you have a relationship with your banker, they can kind of be your advocate to help get that through the pipeline.
Do you have any other some financial advice for small businesses before they come to you for a loan?
Absolutely. So it's my 6 months rule. Every 6 months, check your credit. A lot of times, businesses, business owners, you're so busy running your business, you don't know if you were a victim of identity theft, or maybe there's a small like $20 bill or something that you didn't take care of. Taking care of those issues early help expedite your request. So 6 months, review your credit package. The credit package typically has a personal financial statement. You should have 2 years of personal and business tax returns, a profit and loss statement, and a balance sheet. Those are kind of like the main ingredients to any type of traditional loan package. Have those things ready, review it every 6 months, and that'll keep you ahead of the game. Have conversations with your banker, and that'll help pass it along.
And we got to cut it right there. Schnearia, Ashley, I want to thank you so much for coming on and sharing, and we're going to have you back on the show again.
Thank you.
Thank you. Don't go away, because up next, our Small Business Club Member of the Month.
Our family is no less than any other family.
My heart doesn't see race. Love is love.
Congratulations to this show's Small Business Club Member of the Month, Tamara Hush Lee, fashion expert and celebrity wardrobe stylist, fashion blogger, and owner and style director of Hush Boutique in Upper Marlboro, Maryland. So get ready. Hush Boutique, you're on.
I am Tamara Hush Lee. I am style director and owner of Hush Boutique. I'm also a fashion contributor for Fox 5 Good Day DC. I'm a celebrity wardrobe stylist. I'm a costume designer for movie sets, and I'm a fashion editor. Some of my clients are Anthony Brown in Group Therapy. I work with Michelle Williams from Destiny's Child, Erica and Tina Campbell, Tracy Braxton. It's so many influential women and first ladies in the Prince George's County to add to the list. I've been fortunate enough to be able to inspire so many women in the Prince George's County area because I started this business 12 years ago with little or no money. Little or no money. I mean, I'm talking about I saved up 2 paychecks, and now this business is well on to doing $1 million a year. Customer service is super important in any industry that you go in, but particularly mine because it's a hand-on-hand business. And so when women come in here, they want an experience. You know, you can buy this top from anywhere. You can buy from any store all over, but there's got to be a reason why you come here. And so I make sure that my team and myself, that we give superb customer service. When you come in the door, then, you know, we're just at your feet, you know, to figure out what exactly looks great on you. The most important lesson that I've learned being a business owner in Prince George's County is to build a team. You can't take your business but so far with just yourself. Fashion is my ministry, and so I'm able to minister to women all over the world whenever I am in their presence. You know, whether I'm building their confidence, whether I'm building their wardrobe, I am building them up, and so that's really my purpose in life.
America, let's do lunch.
Drop off a hot meal and say a quick hello. Volunteer for Meals on Wheels by donating your lunch break at americaletsdolunch.org.
welcome back to The Pulse. Getting a small business loan can be a major hurdle, mainly due to tight lending standards by the banks. However, getting outside financing is often a must to start or grow a business or cover day-to-day expenses, such as payroll or inventory. Our next guest is someone you may need to get to know, James Yim, Vice President of Business Banking at Capital Bank. Thank you so much for being here.
I'm glad to be here, Denise.
So you work for Capital Bank.
Mm-hmm.
Is Capital Bank a traditional bank?
Well, we are a traditional bank. We are FDIC insured.
Mm-hmm.
But what we are and how we're a little different than much more of the bigger banks is that we focus a lot of our resources on actually businesses and the business owners. And because we're a much smaller bank, we're about $1 billion in size, we can spend more time with the business client. Opposed to the traditional, hey, you want a loan, send us the documents and we'll talk to you in about a week. Generally speaking, what I do is before the client even needs a loan, sometimes I'll meet with the client and I'll give them a realistic expectation of how much money they can borrow.
And when I met you, I heard you speak and talk about how you actually go into a business and look at their financials and really, really help them. Can you talk a little bit more about that?
Sure. Well, I work in two different ways. There's the proactive and the retroactive. So retroactive is, let's say you're a business owner and for some reason you need to purchase a piece of equipment, land, line of credit, whatever that is, and you get referred to me. In that instance, I have a short amount of time to sit with you at your location and to look at your P&L and balance sheet. And more importantly, show you what underwriting looks at and then give you a sort of a method or a reasoning of why underwriting looks at specific lines on your balance sheet and why they look at specific lines on their P&L. And my goal at that point would be to find out as much as I can about your business and then sort of almost be your advocate and promote your business to underwriting. And that's usually retroactively. The other way is proactively. So let's say we sit down and you say to me, hey James, in 2017, I don't need to borrow any money at all. But in 2018, I'm gonna see a need. And my need may be, a couple $1 million for property. I mean, whatever that need is, we have time, at that point, we have time to work together. So same way as retroactively, I'll sit down, I'll go over the numbers with you, but now since we have time, I can then work with your CPA and say, I understand your net income is X. Your net income needs to be Y. These are some of the changes that you may need to look into in order to make this loan more realistic. And generally speaking, when we work proactively, business owner is no longer worried about getting approved. Their number one concern at that point is how do they get the best rate.
What are underwriters looking at when they're reviewing someone's application?
Well, generally speaking, underwriters look at three things. They look at your ability to repay, they look at your willingness to repay, and they look at the type of collateral that you have.
And how difficult is it for businesses to actually get a loan at Capital Bank?
Well, the secret sauce to most banks, well, if you were to look at most banks are typically almost the same when it comes to underwriting, and that's mainly because of federal regulation. But the secret sauce behind most banks is the amount of risk that they're willing to take on. So when I meet with the business owner, I look at your liquidity, your leverage, and your coverage. But that coverage is what what the difference is between a much larger bank and a smaller bank. So simply put, if a coverage ratio is, let's say, 2.0 to 1, or just 2.0, what the bank's really looking for is that for every dollar of debt that you borrow annualized, so if, let's say you borrow money for a piece of equipment and your monthly payment, let's say, would be $100, they're not looking for you to say, hey, your monthly payments are $100. They're just going to multiply that monthly payment by 12, say it's $1,200, and then they're going to say, well, is your business net income enough to cover this $1,200? And if so, up to how much? So when you're looking at a coverage ratio of 2.0, you need to make $2 of net income for every dollar that you borrow.
Okay.
Does that make sense?
Okay, yes. And then, okay, really quickly, what's the most important piece of advice that you would have for a small business owner who's looking for a loan today?
Well, a CPA is the business owner's best friend. At the end of the day, all the CPA wants to do is reduce the tax liability and save the business owner money. Unfortunately, when a business owner doesn't give the CPA direction, or if they're not working together with the business banker, CPA is just going to do their best, lower their net income, and that usually is what stops a business from getting the loan that they want.
James, I want to thank you so much for coming on. I know we had a lot more to get to, but hopefully you'll be able to come back sometime soon, and so we can give them some more advice on that. But thank you so much again.
I'm very happy to be here, Denise. Thank you.
You're welcome. Stay right there, because for real, you don't want to miss what's next.
Life's taught me a lot, and I'm ready for more.
Well, you're not the typical kind of candidate that I hire, but you are exactly what I'm looking for.
Your company could be missing out on the candidates it needs most. Learn how to find a great pool of untapped talent at gradsoflife.org.
Welcome back to The Pulse. Ever since I was a child, one of the best pieces of advice my parents have always repeated to me is, you better learn how to manage your money. Well, my next guest just so happens to be the co-host of a hot and serious radio show. Malcom Ethridge is a licensed financial advisor and co-host of Manage Your Damn Money. Welcome to the show, Malcom.
Thank you. That was a great intro. I appreciate that.
So can you tell us a little bit about what you do?
Sure. So first and foremost, I'm a licensed financial advisor. I work primarily with business owners on pretty much anything you can't walk into a bank center and do at the teller window. Okay. Then also, because personal finance is such a passion of mine, I do, as you mentioned, co-host a show that streams live every week, and then also is on iTunes. It's called Manage Your Damn Money, as you said, where we talk about all things related to money, but then infuse some pop culturally relevant current events to kind of keep it interesting. Because as you probably know, finance is like one of those things that your eyes glaze over, you get tired of hearing after 2 minutes, and then it's like, you know, when's the next?
Yes.
You know, so. And
we're constantly hearing about, or hearing complaints about, why can't I get access to capital? We talked before about helping making businesses bankable. Yeah. Can you talk about that a little bit?
So the term bankable basically means making sure that your business is in such a strong financial position that most banks generally would be willing to lend to you. Okay. So I know that you mentioned before that you had talked to a couple of different bankers, that some traditional, non-traditional, and they all have their different parameters. But for a business to be bankable, that really means that you're basically just on top of your stuff. You know your numbers, everything's in order.
And what is the first step for a business to get prepared to apply for a loan?
Kind of what I just mentioned, knowing your numbers and being on top of it, making sure that you have those important documents like your formation agreement, your articles of incorporation, whatever it is, the proper licenses for the type of business you do, a couple of years of tax returns for, you know, since you've been in business, those kind of things. Making sure you have them readily available and don't have to make a banker wait when you go to apply for financing. What
about if you're just starting out? Just starting out.
So if you're just starting out, get on top of all those things I just mentioned. Those are kind of like the must-haves before anybody will even take you seriously.
Okay. What steps should a person take before they meet a banker?
So a few things that you can do to make sure that you look as attractive as possible, I guess you should say. Maximize your cash flow. So make sure that you're showing on paper that your business is growing, because a lot of lenders, they want to see where's the cash going to come from that's going to service this loan that this person is asking for. So making sure that you maximize your cash flow by doing things like staying on top of your receivables. So you're not in the business of lending money, don't lend it to your vendors. And then if you do have invoices that are late and folks are late to pay you and that kind of thing, a lot of times the business owners won't necessarily follow up on those at the rate that they should. But things like that help to improve your cash flow and show banks that you actually are worth lending to. So the sooner you can start developing those habits from day one of starting that business, the better off you're going to be. And also keep very good records, because you're going to need them.
Yeah, is that a big issue that you see a lot today?
Absolutely.
Okay.
So folks will come in or send an email or whatever requesting some sort of funding, and then when you come back to them with a request for the necessary documents, it could be weeks before you get them back sometimes. Oh, my accountant has them. Oh, our CFO has them, that sort of thing, which causes delays in your ability to get financing, but it also kind of pushes you below to the next priority. So you want to stay top of mind and get things to your banker as soon as possible, and then also be updating your banker with those kinds of things as they change. So every 6 months, every 12 months, update your banker with a new copy of your profit and loss statement, your new tax filing for the year, those kind of things, so that they don't even have to ask for them, because then you'll be in their good graces, and every time you come to them for some new source of funding, they're happy to give it out to you, because you're one of the few people who's staying proactive and reaching out to them to update that.
It seems like that would be something that people or small business owners may want to stay away from, like keeping those negatives hidden from their banker. I mean, because I know we talked in the first segment about your relationship with your banker and everything. I just never looked at it that way, where you're in constant contact periodically with your banker, just like I'm in contact with my best friend or something. But it's like, I would think that somebody is going to try to hide it, and that's going to hurt you more, right?
You can't hide those things from the bank. They have all kinds of different audit and risk protocols in place to make sure that underwriting doesn't miss anything. And if underwriting does just so happen to miss something, they've got all kind of parameters to go backwards and say, okay, well, we made this loan to you on these premises, and now we find out that's not the case. We've got to do something to redo this loan, or completely take away the funding, the financing that you have in place. So you can't really hide anything from your banker. You might as well just kind of be proactive, have a answer ready for why certain anomalies exist and that kind of stuff, and be ready to explain them.
So credit is an obvious must to keep, intact.
Absolutely.
But what about the person who had some bad luck along the way, and they don't have the credit score that, banks are really looking for? What can they do?
So you do have other banks out there that do specialize in helping those kind of business owners, and you do also have a lot of local resources. So Prince George's County, for example, has a couple of different resources that are there to help folks who either are brand new to starting their business, so they don't have that 2 years of tax returns that we talked about, or folks who, like you said, their credit may not be that 680 that every bank covets as kind of like their starting point as far as where your personal credit score has to be to apply for and receive a loan. There's a couple of different resources out there. A lot of times it's from municipalities, it's from the government. The SBA as well is there to help with those kind of things. So if you're serious about getting that kind of funding, and you're willing to go through the extra steps to prove yourself as worthy of trustworthy to the bank, that sort of thing, they definitely exist to help you.
Okay. And then, we've had a conversation offline about millennials versus the Generation X.
Yes.
What's the difference between a business owner who is a millennial versus somebody who's a baby boomer?
One of the keys is technology. So I myself am a millennial, and one of the keys is we're a group who has grown up with technology, so our views around business have been shaped by technology. But then separately from that, everybody, it seems, in our cohort, that 18 to 35 millennial age group, has some sort of entrepreneurial interest, where that may not have existed with the Gen Xers and the Boomers, where you kind of you do your job, you go to work 9 to 5, that is kind of your thing. You see a lot more, the trend with millennials is, yes, I have a 9 to 5, but I also have this passion or two that I'm really interested in. I'm going to pursue that on the side, and if that somehow becomes a paying gig, then I'll figure out a way to turn that into a viable business. We see a lot more of that becoming a trend, and social media helps with that a lot. It's possible, believe it or not, these days, to build a whole business around social media.
Okay. Who's more financially responsible, the millennial or the general?
I would say it's probably millennials in the sense that when the money comes in, it gets positioned properly. The difference would be the 2 generations before are a little bit older, so they're more established, so they have more of that money. But what I'm seeing is the trends that we keep seeing say that millennials are being more responsible with it because we have, again, technology, different apps that are available, different computer programs and so on that are available to help you save better, help you invest without having to actually have a face-to-face conversation with people, that kind of thing. So it looks like millennials are taking advantage of those resources a lot more than the generations before. The challenge is just, you know, however many trillions of dollars of student loan debt that are kind of like bearing down on top. But I think once you see that kind of dissipate, people pay that down and get different loan forgiveness programs and that kind of thing, you'll see a lot more financial savvy from that millennial generation.
Okay, and you know, we don't have a whole lot of time left at all, but if someone wanted to call you for advice, where could they contact you?
So I'm all over social media. Our show is actually on Apple Podcasts as well. If folks want to catch previous episodes, they could send us in questions, comments, concerns to info@ManageYourDamnMoney. And then I'm at Malcom on Money on all social medias.
Okay. Malcom Ethridge, I just want to thank you again for coming out today. We got to get connected with your show as well, and hopefully you'll be able to come back on sometime soon and give us some more financial advice.
I appreciate the invite.
Okay. Don't go away, because we'll be right back with top tax tips. Business expenses are the cost of carrying on a business. The good news is they can be tax deductible. Here are this week's top 3 most common deductions available to small business owners, courtesy of fitsmallbusiness.com. First, take the home office deduction. If you use part of your home for your business, you can deduct a portion of expenses like your mortgage interest, insurance, and utilities. Number 2, take the auto expense deduction. If you use your car in your business, you can deduct your car expenses. You can choose either the standard mileage rate method, where you would multiply the total miles driven for the business by the standard mileage rate for the year, or the actual car expenses method, where you can deduct actual car expenses like gas, repairs, and insurance. However, if you use the car for personal and business, then you need to calculate the percentage the vehicle was used for business purposes first, and then apply that percentage to the total car expenses. Finally, when in doubt, do lunch. You can deduct 50% of meals that are considered business related. This includes taking a client out to lunch or even ordering pizza for the office as a special treat for your employees. Hopefully these tips are helpful. Just remember, consult a tax professional when it comes to your taxes. And that's our show for today. I want to thank all of my guests, Schnearia Ashley, James Yim, and Malcom Ethridge. This show and previous episodes are posted on our website, diversity.mypgc.us, and click on the pulse. We are on Twitter and Facebook and Instagram at PGC Diversity, and our YouTube channel is The Pulse TV. Come join our small business club for a chance to showcase your business on this show. Send an email with the link to your company website to sdddoutreach@co.pg.md.us. And if you would like to see your business on this show, take a selfie. That's a picture of you and your business, and it has to be a selfie. Send it to us on Twitter at PGC Diversity, and be sure to use the hashtag #SelfieOnThePulse. I'm Denise Roberts, and remember, in Prince George's County, your success is our success.
It takes less than 1 minute to find out if you may have prediabetes. You can do it here. But I get it, you're busy, and busy people can't have prediabetes. I read that wrong. They can, okay. Just go to the site.